Hi, Tim Bigham for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rbtrader.com. Looking at a market that is really still range bound. We have talked about it really ad infinitum. This is the tightest trading range for this long since 1990. I went back, did some research. So since kind of that post-Brexit rally stalled out, we've really seen the spiders 214.50, 219 and change the upside. So less than a 2.5% trading range over the past 40 trading days, believe it or not. Looked like this morning we were going to break out perhaps to fresh new all-time highs, but now some selling has come in. So lack of commitment, it really comes down to that old yin and yang we've also been talking about for way too long, which is valuation concerns versus free money. So the market trading at certainly a rich valuation on historic basis. Price to sales, as we talked about the highest they've ever been since the dot-com bubble. PE ratios approaching 19. We've had 6 straight quarters of earnings declines, right? And that's with kind of manufactured earnings with stock buybacks and the like. So certainly this is not a cheap market. Where we go from here really, I think, is critical as far as the direction until the end of the year. So I'm actually, for the first time in a long time, buying some straddles and strangles here outright with the VIX. Right around that 12 level. Option prices, which is another way to look at the VIX, are about as cheap as they've been too. So we've been wound up super tight. Options are super cheap. I like buying both sides. I really, it's a flip of a coin to figure out which way this market's going to head. But I think when it does break out, it could be meaningful, either some big short covering if we break out to the upside and some long positioning, or if we break down, obviously some fierce selling. So kind of like buying option premium here, like also buying some puts on the red hot stocks, Alibaba being one. The stock broke above 100, way too hot to handle, so I'm buying next week's regular monthly September 100 puts, selling the September 100 puts that expire this week. Just looking for that stock to come in a little bit here. Certainly I think, the euphoria is probably a little extreme at these levels, so using that to kind of position with defined risk. Also looking at those option scanning tools, highlighted a GT trade from a couple weeks ago. That stock got an upgrade today by Deutsche Bank. We saw a huge volume in the September calls in front of this, so that's why using those arbitrator option scanning tools and following that order flow can sometimes be a big time edge in this market. So until we break out, we don't, and until we get back to regular trading with some volume, probably tomorrow, we'll see which way this market really wants to head. But as always, here's the good trading. Take care.